So good morning, active traders, and welcome to another spectacular session of our Trading Week Ahead broadcast. Now with just under 6,000 people registered, we are, I think, the number 2 most people registered webinar in the whole world, right? I will be speaking at the Wealth 365 event coming up in January, so do be sure to register for that using my link that I sent you guys. They've got more than I do, but I'm coming in a close second. I got 5,800 of you registered for these Saturday shindigs. Thank you so much for being here. Let's get underway. With our broad market rallying to new highs on a cessation of tensions with trade war issues and some resolution out there, we've got a really good, strong directional market. Small followed by large whole real body candle. Resting day on Friday. We're still in a very strong directional uptrend. We hammered out a bottom here right near 3070, and the S&P is currently roaring to new highs just under 3,200. How many of you think we're going to get a year-end rally? Either type in the word, I don't know, rally or Grinch. We may get a sell-off into the end of the market. So far, it looks like nothing but buyers for the most part. So how many of you think we're going to keep going up, or how many of you think we may be due for a pullback sometime? I'm still waiting for the pullback, but in the meantime, I'm long the market because that's what the market's doing. As long as it keeps bubbling on up, the market can stay irrational longer than we stay solvent. So you don't want to be a bear in a bull market, right? And vice versa. Almost everybody rally in a couple of Grinches. Okay, we will see. It'll be interesting to see. Oh, let's see. Rally ho, rally, rally, rally. I'm not going to read all the names. These are scrolling by all the people. Short-term up micro rally. I agree with you, Marcelo. I think we may well get a continued move up. But being such a headline-driven market, all it takes is, one negative tweet or one negatively interpreted headline to do another 300 Dow point drop in the market. So do be ready with some of the inverses in case that hits. But so far, we're in a good, strong directional uptrend. From a sector standpoint, or the other market internal, to keep an especially, this is a good, smart, professional trading tip, keep an especially close look on your VIX, always, but especially this next week or two, and see if the VIX climbs back north of 14 or 15. I would say if we start to recover 14, the market rally may slow down. If we get back over 15, the market will at that point likely be in a downtrend. The VIX trades opposite, or it measures opposite to the stock market. We've been in a 12 to 14 congestion box during most of November. It broke out earlier this month, and a lot of large green candles. So we do have some volatility looming on the horizon, and obviously we could trade the VIX ETNs to capitalize on that if it comes back to life, which it may well do. So do that's your tip of the week, is keep a careful eye on the VIX. Any good smart trader should do that anyway, but always be following the VIX on a 90-day chart like this, like any of my institutional clients or professional trading outfits do. So the VIX is the other side of the S&P, right? The other key market internal look at. The other thing to pay attention to is sectors. Which sectors are beating the market? So far, it's pharmaceuticals. People can't get enough drugs. That's probably not a good thing, but despite that, we just care about the money to be derived from trading these things. We got directional volatility up the yin-yang. That's a good technical term. Directional volatility up the yin-yang. Live from Colorado, it's Calhoun. Having some fun here on a Saturday morning. I hope that you folks are doing outstanding in your trades. Happy freaking holidays to all of us. Ho, ho, ho. Merry Christmas. Anyway, back to it. I've had a little too much coffee. Our sectors are strong with them. Pharmaceuticals and biotechs are especially strong. Semiconductors got a nice boost out of the China trade war cessation headlines earlier last week, Wednesday, Thursday. What I like about this is how high the green candles are. Notice, please, Thursday was the largest green candle day in 3 months. That is statistically and trading-wise significant. Always be on the lookout. This is a quick professional tip, is on a 3-month chart, keep an eye on the height of the whole real body green candles and make sure that you're looking for charts that have recent buying strength with directional volatility. When you're looking for individual charts to trade, here's a few to keep an eye on. Now, of course, I have better charts. These are great charts, right? But I have even better charts for my Swing Scans members coming up at the half hour. But for you folks, just for you, because you're here on a holiday season Saturday, welcome aboard. Wow, a huge turnout today. Thanks. It's a question from Bill when talking about the 3-month chart. Each candle is a 1-day period. So it's a 90-day daily, good question. It's a 90-day daily candlestick chart, as you can see from the scale of measurement down here, October. My technical analysis of stocks and commodities magazine articles use this as well. We use the 3-month, 90-day daily candlestick charts. And do remember to vote for me, if you would, please. It's the Readers, I don't know if the Readers' Choice Awards are still open. I was rated #1 and #2 in the world last year, and thank you for voting for me. Please do so again. Vote for me again. It'd be great to get a three-peat. I was voted #2 in the world year before last. I got the gold medal and hit #1 for the articles for stocks and commodities in the world last year. So I'm grateful to all the thousands of you who voted for me. It means a lot to me. Anyway, directional volatility, that's starting to look good. Taiwan Semi looks good. Micron and AMD are probably a little better. Hint. ISEE, another good chart for small cappers. This is one that my small cap scans members got. This guy, I don't only quadrupled, right? It went from $1.40 up to just under $7 a share. Pulling back a little bit here, but look at all the green candles and the 45-degree angle breakout. Exceptional relative strength in ISEE. Avon Products. Is that Avon I hear at the door? Nope. Avon. But anyway, AVP taking out new highs. We got a hammered out a base here at the 100 simple moving average. Ran all the way from 430 to 530. A nice move here, bullish lower shadow. Be on the lookout for this pattern. As I've taught you for years, small followed by large whole row body green candles. Now I don't mean a doji. Looks like like this. I don't mean that. I mean this pattern where you see a small followed by large, small followed by large, small followed by large. That's what I call an acceleration ramp on the candlestick patterns. You're looking for an increase in directional volatility and the height of the whole row body candles. That's a very good, clever, intelligent, professional approach to looking for, is it likely to keep going up or not? And those are the types of charts that we like to cover in my services for active traders. For day traders, we know who we are. We like charts that go a little something like this. Now, I don't know, CN was great. One of my traders, I had so many smart traders in the room. You got a couple of traders that like almost all their picks work, which is great. So thanks for being there. Anyway, he mentioned, actually Wendy and Richard both mentioned, I think it was CN when it was here, two of my traders, and Richard's calls have been great. He's like been 100% on his calls the last month. So it's close to 100%. It's been great. Anyway, this was pre-market. In market was a good directional breakout from 38 to 43. 5 points. If you just traded 100 shares, you could have made up to $500. If you traded 1,000 shares, $5 grand. The key is consistency. If you're going to day trade the markets, do not trade the stupid, dumbass, under $10 pop and drop, low float, crappy stocks, the guys who have a lot of theater and makeup using sim accounts in the Bahamas that they're making thousands of dollars a day. You know who they are, right? It's a lot of BS out there. If you want to learn professional day trading, learn from people like myself. Or Harry Boxer's another great guy to learn from. He's the other great breakout trader I know in the world. And Harry's brilliant. He's freaking brilliant. I'm a big fan of Harry Boxer, personally and professionally. He's the other guy. If you don't learn from me, learn from Harry. But kind of us, the two best guys for breakouts. Anyway, but CN is, and his book is great too. Anyway, directional intraday swing trade ran up nicely. That's the kind of chart you want to focus on. And learn candles exclusively from Steve Nissen, not any other person. Everybody just copied Steve, just like people copied me for a lot of my day trading approaches. Learn from the original. Still the best, running my live room, celebrating 20 years in business, right? 20 years to the live room and 21 years in business now. So anyway, if you want to trade charts that work, you want charts that have consistency. BHC was great on Thursday too. A nice open range breakout. You got your ORB on the front end. And then in range, you often get a 45-degree angle move. And so it's much easier to trade these kind of charts than the under $10 low float pop, drop, and chop crappy stocks. I inherit a lot of people that abandon the momentum $3 crappy stock chat rooms because curiously, only the guru seems to make money, but everyone else loses their shirts. And there's a reason. It's carefully designed theatrics, what they do. I'm the real deal. I've done close to 9,000 real money trades with proof from my Fidelity account this past year. Who else has that kind of experience and traded as much as 4.9 million? I'm nicknaming myself the $5 million man in a single year. I know how this works. Anyway, and join me next week for free, Monday through Friday from 3:30 to 4 in the afternoon, and we'll look at my performance. We'll look at not only real money trades I've done, but also the alerts that I posted for my members earlier that day, which, by the way, also makes, for a good watch list for each following day, the previous day's gainers. Anyway, BHC looks good. Micron is good. I don't know if anybody was following LMPX yesterday. One of my traders mentioned it to me when I was there. I said, go long over 27.7 and again over 30.7. And I had us get out at 34. That was my exit call, was right under 34. So really nice directional play. Ran for even more points. Now, I never get I seldom get bottoms and tops. I'm just looking for, a nice chunk of profit in the middle of the range. But that was a good call. It was 27, I think it was 27.70. On the breakout. I know 30.7 was our second long call, and 34 right under that whole number right there was the exit. We didn't fool around with it over here. This is a choppy zone. You want the initial move, a bull flag pullback, and then a breakout continuation. And that was winning calls for trading the open members yesterday. If you were there, you saw how good it worked, right? So it's all green. Cha-ching. Flawless victory. CN was a good chart on Thursday for us as well. Right, good directional move. So you want to trade stocks and you want to try and figure out how to make it work. Well, whether you're trading cheap stocks like this or more expensive stocks in the $20, $30 share range, you're in the right place. And I want to give you some insights in terms of how it works. Let me see if any questions. Oh, hey, Mukesh saying Avon, selling beautiful Oahu, right? Greetings from Arn, Germany. Hey, welcome aboard. What time is it in Germany? I have no idea. But welcome to all of you from around the world. It's great to see so many of you here. Got that, thanks. Daily candles over the 3 months. Yeah, good point, Bill. Yeah, as you're looking for good charts, look for these patterns. They're kind of hallmark patterns or core foundation volatility patterns that I specialize in teaching traders, supported with live alerts each morning. And one of the neat things is I like to cover the alerts each morning for my traders before they open, right? Starting at around 8:45, 9 o'clock at the latest, my traders get the watch list of what's worth trading and the specific entry triggers for paper trading to practice in market. So you can learn the patterns. And it's been a real honor, having so many of you join as members lately. So I do appreciate it. You have my word, I like to work really hard to figure this out. It's kind of like a chess puzzle or a math puzzle. You're trying to figure out where's the next play and where's the money going to come in after I put on the trade. That's why I like lead indicator type charts. So you've got small followed by large whole row body candles. You got breakout patterns that are consistent, reasonably consistent. Does everyone see this little pattern here? And again, that's right under bullish cup previous resistance area. I'm not going to draw the line, but that's a good setup. Okay, I'll draw the line. This is a really good setup on any price chart where you've got a bullish cup pattern, the key resistance area, and the trick is, oftentimes you see a cup and handle, right? You see a little pullback which forms the handle of the cup. That's not really important. What's important is to look for increasing price action. I'm a price action trader. It's what I've done for 20 years. I'm all about price action. I don't care about news. I don't care about fundamentals. I don't care about earnings. I don't care about PE ratios. I'm just, show me the money and where's price action likely to come in and increase for a nice breakout. If you've been struggling with false breakouts, if you've been struggling with charts that don't seem to go anywhere, if you've been struggling with options that expire worthless, you're in the right place. I want you to substitute or replace some of your less successful strategies with more successful ones. And I'm a big, passionate fan of testing and experimentation. I learned that as a statistician and a quality engineer at the Ford Motor Company. I was doing design experiments designed to help improve quality, how to improve production yields on a manufacturing line, how to improve engineering parameters, and all the rest of it to create systems that are robust. In a car, we have 5 major systems: a powertrain, body and glass, electronics, vehicle electronics, and so forth and so on. It's very complicated creating a car. I also worked on the GPS satellite as a quality management coordinator for Rockwell International in Seal Beach back in 1991. So I've got a strong quantitative background, and I've traded millions and millions and millions of dollars even in a single year as an active trader. And I like to teach you the difference between an intelligent approach that has the potential for more consistency versus the haphazard pop and drop momentum. Hey, it looks good, bet the farm and lose your shirt type approach. So this is one example of one of my very favorite increasing volatility patterns for swing or day trades. We're right under a key resistance area. On a day trade, it might be on a 2-day chart right under the prior day's high. On a swing trading chart, it's usually a bullish cup or an ascending triangle or other bullish breakout pattern, or just a straight directional trend. You often hockey sticks up with small followed by large whole row body candles like this that then skyrockets on up for a bit. So those are the type of charts we like to cover. Another pattern to be aware of is when you have a large green high volume candle, notice always on a 90-day chart, I've got to wrap up here in a minute, gang, look for where is the biggest green candle on a 3-month chart. And if it's not right before where you put on a trade, there's something wrong. You want to find charts that have a big green candle before you put on a trade. So this would make sense to look at for a trigger, not a trade recommendation, but somewhere we're say 32.5, right? Because volume is significant. It's over 12 million shares day before yesterday. And we've got a nice continuous uptrend that then sharp angle breakout, kind of resting pullback day yesterday, which is common following a big day. And then we'll see if it resumes its march upward next week. So anyway, I'd love to work with you this next year. I hope that I have made a case for an intelligent, successful approach. Let me earn your trust, by looking over my shoulder all next week, Monday through Friday, from 3:30 to 4. We'll go over the week's or the day's hottest charts, and also how the alerts worked out for our members. We'll cover all the daily recap of all the wins, the occasional stops, and the lessons learned, with a good 5 or 6 charts each day. So again, to register for that, the link is here. I've got a wrap because I've got swing scans coming up in a minute with even better charts for my swing scans members. So the open house is at trademastery.com/TTO free. I'm not doing free morning sessions next week because that's for my members only, but I will at least be there for you guys from 3:30 to 4, or trading the close or the closing bell or whatever you want to call it. And we'll look at the day's hottest charts. And that's a good preparation for each next day. The previous day's gainers are a great place to look in addition to the current day's gappers, right? What was the biggest runner yesterday, or biggest 2 or 3 runners yesterday? So we'll look at those as well. And I'm hoping that, I can earn your trust and your respect and earn your business by a good, honest, step-by-step approach, teaching what I've learned over the last 2 decades as a full-time trader, and be able to show you what works. And it's good for swing trading too, by the way. Not, I should say day and swing traders, but mainly day trading, but also for swing trades. If you are a day and or swing trader, I've got my all access pass on sale. Now includes $1,000 worth of downloadable courses and more. You can see information on that. You go to crushwallstreet.com. If you want a shorter, catchier title, that'll forward you over here to this page, trademastery.com all access. This is the best offer I've offered in the history, 21-year history of my company. And you get webinars 6 days a week with me. You don't have to show up for all of them, but at least pick the best days and show up for those each morning, and I will work with you and answer all your questions and give you good interactive support. There's no back end or no upsells or no shenanigans like that. I am very honest and very hardworking, as you could probably tell, and I hope that you'll give yourself the gift of knowledge. Give yourself the trading gift that keeps on giving. Work with me all next year. It's my best year ever, with the number of folks involved in the company. And of course, I have a satisfaction guarantee. If you're less than thrilled at the end of the year, I'll give you another $1,000 worth of courses, as kind of a rebate type thing. So lots of information. I hope to see you there. Do register. You have my word. I'm going to work very hard for you. And bring questions, to the sessions. I think that's about it. Yeah, there is a link in the box, I think, at least for the free sessions, the TTO free. It's at trademastery.com/TTO free for Trading the Open free. So trademastery.com/TTO free. I'm going to wrap up. You folks have a fantastic holiday season. Tis a season to be jolly, especially with the rally market underway. And we've got lots of new things coming. You can see I've upgraded the website significantly because we've had so many new customers join. So many thousands of people in my company, traders as customers and members and whatnot. It's good to see a big turnout. So hope to see you guys there, and I will see you next week. So drive safe out there. People are driving nuts during the holiday season, so distracted drivers and whatnot. So be safe, trade smart, and I will see you next time. Thanks for being here. And I apologize in advance for